Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the late morning of Thursday, August 29th, 2019. Thank you so much for joining me for this video. And just a quick note, moving forward, I will now be publishing weekly video updates like this on the Palisade Radio channel every Thursday. So look for these video updates every Thursday. Right now in precious metals, looking at the metals and the stocks, they are trading around and testing important resistance levels. Now here in this chart, we have gold at the top and then the gold COT at the bottom, which if you follow my work, you know that I measure the COT, I measure the net spec position as a percentage of open interest. But starting off with the technicals in gold, there's big resistance for gold around 1550. We know that because essentially there's a big pocket from 1400 to 1550, 1575. That's where gold crashed in the spring of 2013. So it's not a surprise we've been talking about 1550 resistance for a month or two now. Also, there's important Fibonacci resistance at 1575. So perhaps gold could make a marginal new high before it has a correction. I don't know, but keep 1575. Keep that in mind. Now, gold is kind of in the middle here between support and resistance because gold has initial support around 1500, but then strong support at 1425. But it also has a measured upside target of 1700. That's from the big bottoming basing pattern of the last 6 years. So the question is gold going to correct first before trying to reach 1700, or is it going to fight through the resistance right now and get to 1600 and then maybe squeak its way up to that 1700 target? I don't know. Nobody knows. I would prefer to see a correction here first, just because that could clean the market of some of the excesses, and it's not to say there's a ton of excesses here, but cleaning the market a little bit, pushing sentiment down a little bit. I mean, if that happens and gold tests 1420, 1425, if it's a successful test there, you know, that could set up the market for another strong leg higher to 1700. But we'll see what happens. Now, with respect to the COT, I published a video on my channel talking about this a couple days ago. Yes, the net spec position is at an extreme right now, as you can see, comparing to history. However, we have to note the context, and we really have to look at fundamentals and technicals to really get a sense of where things might be going. You can't just look at any one thing by itself. Now, look at what happened during major breakouts in the past. You look at 2003, the very beginning of 2003, gold broke out to 6-year highs. The bull market really started to get going. That's when money started flowing into the real juniors. The net spec position, it kept rising, and it got fairly high there in the middle of 2003 when gold was consolidating. But even after that, gold just kept trending higher. So that didn't matter. And then you look at what happened in late 2005, very beginning of 2006. Gold broke out to a 17-year high, but the net spec position, I mean, look at, I've highlighted there in the summer and later in the year. I mean, it got up above 55% 2 or 3 times. Yet if you would have used that and sold there, you would have missed a massive move from the 400s or low 500s up to 730 in early 2006. And look, the same thing happened again throughout 2009, I should say. Gold broke out later in the year to new all-time highs. Look at where the net spec position was, again, in the 55% to 60% range. Now, you can see what happened after those big breakouts, those last two that I mentioned. The commercials, because the market was so strong, they were forced to start covering their shorts. So then the net spec position actually declined as the market went higher. So that's a possibility in the future. I'm not saying that's going to happen right now. But look, the big picture here is, yes, in the near term, the COT is at an extreme. Gold is at technical resistance. But however, gold just had a major breakout. It made a 6-year breakout. If we look at what happened in the early 2000s, in the mid 2000s there in 2009, 2010. If you look at what happened when gold made significant technical breakouts to new multi-year highs, it just kept on running despite an extreme net spec position. So please keep that in mind before you just turn hugely bearish just based on the COT. Now, at the beginning of this video, I was mentioning resistance, gold at 1550 and 1575. Silver, this is a target I've been talking about. My premium updates, the mid-18s is a very strong target. This is the monthly chart. Obviously, there's a day or two left of trading, or 1 day left of trading, actually. And whether you look at the daily, weekly, or monthly chart of silver, all of those charts point to the mid-18s as a strong resistance level. Again, this is the monthly candle chart. You can see it here quite clearly. There is some trendline resistance at, I want to say 1940-ish, and then you have 20 and 21, which are important levels. Now, those $19 to $21 levels, silver can gain lots of momentum if and when it can surpass those resistance levels. Then it could probably get to 24, 25, 26 fairly easily. Now, I did write an article this past weekend. You can find that at thedailygold.com. It's about bull analogs in the sector. And the average rebound in silver, if this rebound were to follow that path, would take silver to about $24 by the end of March 2020. So that's just something to keep in mind. But again, here and now, silver is at resistance. I'm not saying it can't go a little bit higher and maybe even test 1940, but silver's been very strong, and it has reached that technical resistance in the mid-18s. That being said, last comment here, I really love the look of this chart. It's just absolutely beautiful, particularly the last 4 or 5 years or so. I mean, the beginning of 2016, and then you have a big double bottom at the beginning of 16, and what's happened over the last 12 months. The right side of that big double bottom is a double bottom itself. So, I mean, we know that there's no way silver's going below $14 in that strong support. It's clearly exploded above that. Moving forward, it's going to have to deal with the resistance here and now, mid-18s, 2021. Maybe that's what happened. Maybe it tests those levels in the coming months. But, when it can get above 2021, that's when momentum will really start to pick up to the upside. Okay, last chart here. Looking at the miners in the weekly bar charts, we can see here GDX, that's at the top, and GDX.J at the bottom. They're testing long-term resistance. Now, GDX is testing that 2016 high around 31. Now, there is potential upside to 32. That's a gap that could be filled. So possibly, if gold gets up to 1575 and that's the interim peak, maybe GDX can get up to that $32 target. For GDX.J, it's been testing resistance at 41.42. You can see that dates back to 2014. So that's an important level. GDX.J does have a potential measured upside target of about 45. Could that coincide with 1575 gold? I'd probably say maybe it has to be 1600 gold. So that's where we are for the miners. If you look at these charts, they're testing long-term resistance. So maybe they're gonna, maybe the correction is starting here and now. I don't know. We can't predict the future, but it's just something to keep in mind. That's all for this video today. Please check out all my work at thedailygold.com and go there. Consider subscribing to my premium newsletter. It's only $149 for 6 months. That's at thedailygold.com/premium. We focus on market timing and stock selection. We want to get into the best stocks, the best juniors at the right time, and use a disciplined approach in trimming positions and cutting losers. And that's all for this video. Thank you so much for watching, and I look forward to publishing the next one for you guys. Again, that'll be next Thursday. Thank you.